Hello, everyone. Welcome on the stroke of 3 o'clock to the Solactive ESG Fall Series 2020. This is the webinar 4 of 5, and we are going to be talking about sustainable stewardship at the Crossroads, delivering the SDGs. So in this session, I'm pleased to introduce our 2 expert speakers. Firstly, we've got Faith Ward, who for the past 3 years has been the Chief Responsible Investment Officer at the £30 billion Brunel Pension Partnership. But prior to that, Faith spent over 20 years at the Environment Agency Pension Fund. And in that time, she spent 10 years as the Chief Responsible Investment and Risk Officer. So Faith has some very strong sustainability credentials. She was fundamental in the creation of the Transition Pathway Initiative, and that is a global initiative led by asset owners and supported by asset managers. This was aimed at investors and is free to use. So TPI assesses companies' preparedness for the transition to a low carbon economy. We've also got Erik Breen, who's Managing Director at Infinsis. Infinsis is an innovative, creative and entrepreneurial consultancy that provides advisory services to clients to enhance the integration of finance and sustainability. So Erik also has a long and illustrious career in sustainable investments. And looking at his LinkedIn profile earlier, I was quite surprised by how much work he's done in this space. So he's been the chair and is the chair of the IR Framework Panel at the International Integrated Reporting Council. He's been a director of Impact Equities and Bonds at Triodos. He's been a chair and previous board member at the International Corporate Governance Network. And prior to that, Erik spent 17 years at Robeco in a number of roles, where he was also the architect behind Robeco's responsible investment strategy. So we've got 2 very well qualified people to talk about the SDGs. So we're going to try and keep this relatively high level, but we may dip into detail here and there. But the objective today is to cover a few specific areas. So I'd like to talk about what are the SDGs, why should institutional investors care about the SDGs, and how are asset owners, asset managers, and companies respectively responding to the SDGs. And then we're going to wrap up with some questions and answers about, can pension schemes actually align their investments and their investment approaches to the SDGs. So we're going to aim to do this in 45 minutes to an hour. We are open to questions, so if you have any, do please just send some in and we will take them as they come. But let's get started. So the first question that I posed, and I'm going to turn to Faith, is what are the SDGs? So if I'm a pension fund trustee and I've never really thought about this or never heard of it, what would you say they are and why should I care?
Thank you, David. So the Sustainable Development Goals, or the SDGs as we use that sort of acronym, were developed by the United Nations, and they are primarily designed for policymakers. They're to set policy objectives of some of the most fundamental issues that we have in the world today, everything from poverty to the quality of our water to dealing with inequality, to do with climate change, which we've touched on, but also talking about kind of the health of democratic institutions, something that we are all very pinned to today, very timely in terms of today's events. So it kind of covers kind of those big issues that governments around the world, and they've all agreed on, most of the countries in the world have signed up to striving to take efforts to deliver these goals, these 17 goals across all these different issues. And one of the objectives of the UN was to try and create a common language so that if they're a policymaker and they're talking about these issues, if you're talking to people in private finance, you're talking about these issues. If you're talking to people in civil society, just normal people, we can all have and share that common language. And I think this is something that's quite beneficial within the investment world, because I'm not sure about your own experiences, but most of the people I talk to haven't a clue. If I was to bring them into any of my meetings, it would be, a different language, and they really wouldn't understand what I'm talking about in terms of, what my day job actually looks like in many respects. We talk about performance, and these things are just outside really of the scope of normal people's understanding of what we're talking about. But if we talk about, and they're interested, what normal people are interested in is the impact that this might have on their lives, or what they're seeing on television, or what they're seeing kind of impacting people across the globe. And the SDGs is a framework to allow us to translate that public policy, that government policy, but also what the actions that we might take within our own funds, within our own pension funds, what we might ask our asset managers to do. We can do it on a consistent basis and all be talking about the same thing. So I think it gives us that common language to talk to. So hopefully, and also focusing on what we're really here to do, which is to kind of look at that kind of broader sort of economic, social and environmental context in which we live, because those factors are so interrelated in our actual world.
Thanks, Faith. Erik, in terms of the SDGs, again, is there anything that you would add to try and help people who are new to the topic understand what they should be thinking about when they hear SDGs?
Yes, I think that Faith already mentioned a lot, and I absolutely support the importance of the fact that we need one common global language in terms of how we talk about sustainability and the goals we're after in our society. It's important to note, I think, that the SDGs, they really respond to the major systemic challenges that we have going forward, and they provide a coherent vision for a sustainable society. And it represents a global policy agenda, which is also to be implemented at a national level. It also calls upon businesses, and also including finance, to help implement those goals. It not only calls upon those sectors, but it's also important to note that both companies as well as stakeholders will all benefit from realizing these goals. So it's also in our own self-interest to join these forces.
Thanks. And in terms of where we are with the SDGs, from both of your perspectives, are we at the starting point from a pension scheme or an institutional investor's perspective in thinking about what they might mean for them, or are we further down the road? I'll go to Erik first. Okay.
Yes, I think it's really a comprehensive agenda, and it's put forward in the SDGs that we need the active involvement of business, and including the financial sector as well. So it's a very relevant question how that involvement it stands today, and what investors can do. But let's start with companies, because companies and also their shareholders and other stakeholders will all benefit from the realization of these SDGs. And pension funds and other asset owners have an interest, but also a responsibility in advancing the SDGs. And they have that in their role as capital provider as well as universal owner. And so those two roles can be taken as a lens how to handle or how to deal with the SDGs. And companies, to stay with that side, often seek to align their activities with the SDGs, and they like to adopt one or a few of the SDGs. And they develop sometimes also clear-cut targets. I'll give you an example later on. And they try to really focus their business with the purpose and with the mission of a company towards the SDGs. That's where we see leading examples. And if we look at that alignment, it can also be including a second way of looking at the SDGs. And so the first way is to create focus, the purpose. But the second way is also to look at the relationships between the SDGs and really treat it as a holistic set of goals. So it's not just one goal, but it's a set of goals. It's a recipe. It's not a menu. And companies need that focus, so they need primarily to select one or a few, but they need to look at all the SDGs in order to avoid externalities. And so that is important to, as we often call it, to do no harm and to manage the outcomes of the business activities in line with the SDGs, wider than the one purpose that they're striving for. And emerging areas of regulation, codes of conduct, especially in the area of ESG norms for institutional investors, but also for corporates, they typically focus on minimizing the negative contribution. But it's, for me, first and foremost, it's the purpose, it's the positive contribution that you want to make, and then also look at all the side effects that your business activities may have and minimize those negative effects. So that's for companies, but it can be similar also, of course, to look at investors that support those companies as shareholders. And so investors typically can embrace one or a few of the SDGs which suits their ultimate beneficiaries, and then also strive to minimize the negative effects throughout their portfolio companies.
So thinking about investors specifically then, Faith, so from your perspective, with the SDGs kind of coming on the scene in the last few years, how has that kind of fed into your way of thinking about the way that Brunel runs its business? I know that you've done some work with the PRI in terms of a case study on Brunel, looking at the SDGs and asset allocation, but just from a sort of high level perspective, what has it kind of meant to you on a day-to-day basis, or where you see the fund going forward?
Thank you, David. I'm really sort of quite taken by Erik's analogy between a menu and a recipe. And I think that is, because you asked kind of what progress we're making, and I think that's the key, is there's many of these SDGs, and we're familiar with climate action. Obviously, we've been taking action on life below water and plastic pollution in terms of dealing with inequality, diversity, inclusion. These are all areas that are quite familiar within the responsible investment and thinking about environmental, social, governance risks. But we've kind of dealt with them almost kind of as an issues. And what the SDGs, and as Erik points out, it's not a menu of different sort of environmental, social governance issues, if you wanted to use them that way. They're a recipe because of that interaction and that interplay between them. And I think that's one of the big challenges is that, you can do quite well on one SDG, but actually be causing some negative effects on another. And it's understanding how everything fits together. And what we did to help, and then also we had client for partner funds within Brunel who were trying to think about kind of what their priorities were, because there are 17 goals, and that's not a realistic list of priorities for any investor. That's probably too many. That's appropriate from a policy perspective, but from an institutional investor perspective, probably wanting to narrow that slightly. But they are very useful to prioritise, but being, again, aware of the whole picture, again, mirroring exactly what Erik has just outlined. So what we did is we just done a very simple game where we basically, with trustees as an activity, got them into tables and got them to kind of basically choose a card, any card, if you like, but they couldn't see or choose what they got. So they weren't able to kind of, I'll tell you what, I'll have climate action because that's easy. I know what that might mean. But no, we made it more tricky than that by basically giving them 2 or 3 of each of the SDGs, and they had to then look at them and work out kind of what they felt about these SDGs in relation to their fund, in terms of how that might impact the pension fund more broadly. If there were a particular asset class, if they wanted to positively invest in relation to these, what asset classes do they think this SDG might actually impact on, as in might have sort of negative or positive impacts on? So if you took kind of the some of the more obvious ones like sustainable infrastructure, you can see obviously there's a clear link then to a strategic asset allocation of sustainable infrastructure. So if you wanted to target that one, or dealing with inequalities, you can actually think about, well, which sectors could that actually have an impact on, or which ones could positively impact to it, if you know what I mean? Because there's this dynamic between the impacts on corporates, but also on orange sectors or on any of your assets, but also that it can have an impact on them, but also they can positively contribute to it. So if we took an example around like hospitality sector, I would say that some of the efforts to reduce for decent work that is a sector that has challenges with regards to precarious employment. And there are, if you think about this very much geographically in terms of the whole global economy, there could be some hotel chains for which, higher policy standards on what working conditions must be like and standards or levels of pay, that might actually have a negative effect on their bottom line, even if we know societally that might be a more positive thing to do. So there are some sectors for which, if these are the policy direction of all of government and governments across the world, there could be sectors that are impacted by these. Equally, there are sectors for which, if you look at climate action, SDG 13 and renewables, you say, well, actually, taking action on that one and policy positions on that, that's positive. That's a positive momentum that can get behind that. So this game kind of explored those areas. I think some of the ones they found most challenging are things like number 1 and number 17. So number 1, which is no poverty, and go, well, yeah, that's we all agree that is a perfectly rational kind of goal. But how can a pension fund realistically, from an investment perspective, deal with no poverty? And I go, well, actually, you're a pension fund. So actually take a step back, and strategically, you are doing something by the very virtue of the fact that you are being good fiduciaries, the fact you are thinking about these issues. You are actually protecting the livelihoods and retirement incomes of thousands of people that they have a decent retirement. That is actually positively contributing to number 1 and no poverty. The other one that, it's not number 17, I beg your pardon, it's 16, which is around sort of the democratic institutions. And that sounds all very complicated. They said, well, how could we possibly impact on that? And he said, well, we do have quite sizable investments when we think about cyber security, and we only have to look at some of the case studies about some of the impacts of manipulation and potentially sort of fake news and how that might have an impact on democratic institutions and the functioning of those. So actually investments that are raising awareness of that within companies, but also raising, being positive in terms of some of the companies that are taking action or investments in that space, that could actually help. So even though some of them are more naturally areas for investment strategy design, I would say every single one of them is something where you can actually think of a sort of a macroeconomic kind of risk or opportunity from an investment perspective. And so it's a really interesting, and to be honest, they thoroughly enjoyed it as an exercise as well. So I can recommend, it was just it just broadened their mind, because instead of going into perhaps looking at investments with that traditional lens, it kind of made you have to look at it from a different way, because it's a little bit of a competition between them to think up ideas. So it was just a fun way to access and to think about how these could contribute.
So it's thinking about it holistically from a pension fund perspective and thinking about it holistically from an investment perspective. And obviously when you think about the SDGs, when you start to learn about what they are, you think it is about for the betterment of society. So Erik, is there a danger that people just think about them in sort of impact investment terms?
Well, impact investing is important, of course, but ultimately I believe every investment has an impact. And in that sense, every investment that we make is an impact investment. We just don't treat it as such. We already discussed that the SDGs are interconnected and a recipe, not a menu. That understanding, the deeper understanding of how these issues connect and work in your portfolio, those insights are really necessary. And let me give you one example. Why should pharmaceuticals care about the rainforest? Well, the key insight here is that about 1/3 of the ingredients of new drug come from, guess what? The rainforest. And so it's these kind of insights that we also need, not only to help set the legal standards to move in this direction, not only to be good stewards in that sense, but also to unlock the motivation to provide a good business case for something that otherwise is out of the box. Also, in springing to solutions, we should be cognizant of all these relations. There's a lot to do about plastics these days, and rightfully so. But if we all jump towards biodegradable plastic bags, we should question ourselves also, where do these come from? And the main ingredient typically for those plastic bags, not all, but typically for most of them, is palm oil. And that's questionable as well, because if we burn down rainforest to get more palm oil, to get more biodegradable bags and solving plastic soup, we're putting a stop to one problem, but at the detriment of creating another one. And so that interconnectedness is extremely important, and we need much, much, much more insights in that. So, and what we call at Integrated Report, we call that integrated thinking. How do these things interconnect? How do I transfer value from one capital to another capital? And I think that those kind of insights are absolutely crucial for pension funds and their long-term investment strategies, because it comes down to foresight when it comes down to investing.
So this foresight and the pension schemes thinking about how they can try to capture what the SDGs mean and what they're trying to achieve, they'll turn to typically their asset managers. So Faith, I know that at Brunel you do a fair bit of work with external asset managers and you talk to external asset managers. So how are the external asset managers responding to the SDG challenge, if you like?
Well, the simple answer is it's quite variable, as you would ever expect from an industry it's quite large. And so we've got a variety. So those for which maybe the impact investing, or perhaps they've had exposure to things like sustainable equities, and that's been part of their sort of product mix, then this is slightly more of a natural fit. And what they've sought to do there is to map their investment strategies to the SDGs, so to demonstrate how those things go together. So there's a strong link there between those. Although I will say that there are sustainable investment themes that are not SDGs. So the SDGs are really important and really helpful, but then actually they don't cover every single issue that we have to deal with, or indeed from an investment perspective or from an RI perspective. But they are a very good framing for that. So I think that was called more familiar territory. I think I am quite concerned around rainbow washing, as the term goes, where people have just tried to map revenue flows. And I think that is a very crude way of trying to demonstrate the positive impact that you're having. And I think we are needing to move on to more sophisticated measures of doing that. It is easier I would say easier to see the links in some of the private markets, because you can make more sort of specific and targeted investments in private markets. There's that more clear link. However, the transparency issues that we normally have, even with private markets more broadly, again, so we have those challenges. So whilst the link is easier to see, some of the transparency reporting is still quite a big challenge. So being more sophisticated about what we need to do from a reporting perspective, and not just going, oh, I've invested in this theme, therefore all the revenues going in that must therefore link to the SDG, I think is a start. So I'm not saying let's not get started on this, but we've got to also recognise that what we're looking at here is what are the measures of real world impact, not just some sort of artificial feel-good measure that we can just put a pound sign against, because I think that's not where we need to finish. It might be a starting point, but we definitely need to move beyond that.
So the point about rainbow washing is kind of well made. I mean, Erik, from my kind of experience in the investment industry and thinking about asset management and thinking about how investments are managed, there's the top-down, bottom-up kind of compare and contrast different tensions. Is where we are in terms of asset managers looking at the SDGs, do you think, are they just going to go, oh, here's a product, we can, as Faith says, stick a badge on it, it's already SDG compliant? Or do you think there's more of an appetite to try and embrace the SDGs a little bit more fundamentally in what they do?
I hope so. And I'm an optimistic person, but I'm also impatient. So it doesn't go fast enough if you ask me, and it doesn't go deep enough if you ask me. So that needs more work. And importantly, it's good to note that asset owners and in particular also pension funds are driving this space forward, as well as is EU regulation, for instance. So just to give you a few examples, there's a consortium of asset owners led by APG and PGGM, and they are developing a platform using artificial intelligence for investing in the SDGs. And that's called the SDI Asset Owner Platform. And they're starting, and I'm sure that they will take it further once they get started. Another example is that the pension sector here in the Netherlands, and that is not only limited to the pension sector, but also to other industries. The government called a multi-stakeholder initiative. We call it the IMVO Conference here in the Netherlands. And today, for the pension funds, over 80 pension funds have now signed that initiative, and it means that they commit to developing and implementing and advancing all the policies and practices to advance what authoritative frameworks, not only SDGs, but also including the OECD guidelines and the UN guiding principles on business and human rights, and what those frameworks call for. And that's also, to a large extent, well aligned with the SDGs and what they strive for. And as a final example, we also see in terms of regulation that Dutch asset owners are already subject to increased regulation. That's no different elsewhere. But IORP2, which came from the EU, specifically asked to implement policies, practices to weigh the ESG risk in the core investment processes and also in the risk management processes. So it needs to be in there. And so a lot is going on, and these asset owners can help asset managers by asking the right products. And there are two ways here. One is what you have. Is it suitable still under the new regulations and the new direction? And the other one is help me to answer these new questions with new products. It's again, I'm optimistic we're moving in the right direction, but we've also learned from the UN publication from 2015, and that is the financial system we need, UNEP-FI. From that publication, we've learned that there are multiple ways to forward this space, to further this space. One of those measures could be enhancing best practices and be incremental in that. That's most practice. So these are examples of that. What is least practiced, but what has the biggest impact, and that's difficult, of course, is when we change governance. So when we look at pension funds and we say we will look at the governance of pension funds and how these pension funds are managed and for which purpose, then we have a potentially very mighty weapon to move fast in the right direction. But it takes a lot of courage and political will to move in that direction. We're not there yet, I think. But pension funds, if you look at it, are there to further the interests of their clients, of their stakeholders. So, and that is often rooted in wider society. So they do care for creating value for their stakeholders. So I think they're well placed to play a big role here.
I mean, there definitely seems to be push from the members, if you like, from what we can see in the market and what we just see in the press on a daily basis and the interactions that the public have with their pension schemes. They're very interested in what their pension scheme is invested in, probably more than they have ever been. And coming back to kind of the governance point, Faith, you spent a bit of time talking to policymakers about the framework, if you like, or the structure for pension funds to operate in a sustainable way without compromising their fiduciary duty. I mean, what have you seen from the policymakers? How engaged are they on things like the SDGs?
I think that is still quite new, but if I could just take a little bit of step back and address sort of what you were saying there about the beneficiaries in civil society and how this all links together, is that absolutely, I think that's the number one ask I get is, you know, the reporting, the transparency. Tell me about my pension fund, what am I invested in, but make it make sense to me. Tell me about like real things and in manner that feels a little bit more, you know, I can see the financial numbers, that's great, but I want to know what it's contributing to. How is this not going to be, I'm hoping that I'm not making this the financial return at the detriment of these other aspects. They're wanting to see balance in what we're doing, and they're looking for me to report that to them. Perfectly reasonable. I can only report to them at the top of the tree as the asset owner as to the flow of information that comes to me, either through asset managers or the corporate and assets in which I invest. So that engagement then with the policymakers is to set out that chain that I can only report what's reported to me, and I need therefore a flow of information. So trying to set that policy context that this is actually quite important, so that as companies can see, as we talked about before, you know, what SDGs will have an impact on your company. How can your company have an impact on the SDGs? So you're not kind of seeing it from both sides and saying, look, this is actually a positive story for your company to be able to show that, look, you're aware of the risks, you're managing those risks, you're mitigating the harms, but actually you're positively contributing in these other ways. And so therefore that's what we've been talking to policymakers about, saying actually the SDGs are quite a helpful framing for that kind of long-term policy strategic vision of corporates. And that's what we would like them to encourage them to kind of include or loop that in terms of this sort of corporate reporting standards and recommendations of best practice. I think at the moment the policymakers' attention is quite focused on climate change and social inequality. Now those are two of the 17 goals. I think seeing the whole picture is we've still got some way to go to see that within investment context. So they're seeing the SDGs within their policy silos that they have, but actually seeing how these goals can actually help the investment industry and the finance industry more broadly. I think that the full potential has not yet been realised by policymakers. They're seeing elements, they're seeing the menu, they're not seeing the recipe.
And that's an interesting point, isn't it? Thinking about the information flow. So as investors, we can only really respond to what companies tell us or what information is available out there. And Erik, you were co-author on a research note, Stakeholder Inclusion as an Accelerator for the SDGs. And as part of your research, you spent a lot of time talking to companies. So do you want to share some of your insights and findings from that process where you talked to companies and talked to them about what they needed to disclose or how aware they were of the SDGs and what they intended to do about them?
Yes, and I would also like to add to what Faith said on the reporting landscape. There are huge dynamics going on. Can I briefly spend a bit of time on that before giving you some insights from my interviews with the companies?
Of course.
The reporting landscape at this moment is developing quite rapidly. And there has been a very strong push from both the corporate side as well as from the investor side for one standard. So we need one standard. And what we see today is initiatives from the European Union, and the latest play in the game was a letter from Dubrovsky, the European Vice President of the European Commission, and he tasked EFRAG with preparing the ground for a sustainability standard. And they are expected to report back in the first quarter of the new year. So that's one development that's going on. And behind the scenes, a number of standard setters also have communicated together one shared vision, and not the least. So GRI, SASLI, Integrated Reporting, CDP, and also CDSB, the Climate Disclosure Standards Board. And they've set out a view how they could move forward and what are important aspects of harmonization. And they've been supported also in this process and connected to a few others that are also mentioned in the publication. And so that's the second one. And importantly to note as well is after we have had the financial standard setters not embracing sustainability, they now have launched a consultation on how they could and whether they should, and then how look at sustainability standards. In the end of the day, this should all come together in one way or another. How? I don't know, that's in the future, but it's moving and it's moving fast. And I think that is good news because no one will benefit from 200 different standards where standards compete. We need one standard, and it needs to be strict, simple, and credible, and very understandable, and should serve the needs of our society. That's what we do need. And that will also help us move more efficiently going forward. Now, you asked me also about the publication, so I will now shift to that topic. And yes, there has been a quite recent report. It was published late September on stakeholder inclusion as accelerator for the SDGs. With that research, we look at theory. We introduce a new model for stakeholder inclusion with 6 aspects of stakeholder inclusion and 4 gears, so 4 levels. And we also have some very inspiring best practices and some quotes from Dutch companies. And there is a list of self-help questions if you want to go deeper and further by yourself. The publication was mandated by the Global Compact Netherlands Network. The scope is Dutch companies, but it's also meant as an inspiration outside the Netherlands. So one of the practices that struck me is from Philips. Philips is a focused leader in healthcare technology, and its purpose is really to improve people's health and well-being. And they do that through meaningful innovation. That's how they label that. And Philips aims as a target to improve the lives of 3 billion people a year by 2030, including 400 million in underserved communities. And so that's a real tangible target with a date and a number, and they've developed metrics for that. And this long-term target clearly aligns, if you ask me, with SDG number 3, which is about health and well-being. And furthermore, Frans van Houten, that's the CEO of Philips, he said that without stakeholder management, they are unable to accomplish that mission. So that's important to note as well. We don't do this in isolation, but we do this together. So besides the SDGs being a recipe, Faith already alluded to SDG number 17, democratic process, but it also is alluding, and that same SDG number 17, to collaboration among participants. And so that fits there nicely as well. So we need to do that together. And Philips is, of course, a very large and listed company. So you might wonder, does it also work for smaller businesses? Yes, it does. That's the good news. And so another example, unlisted, Royal Alping, when I receive an email from Alping or one of their employees, of course, in the evening, it says, normally it says, send from my iPhone or something like that. But with them, it said, send from my Alping mattress. So that's what they do. They make mattresses. And it's a relatively old company. It's Royal, so it's dating back over 100 years. It's established in Deventer. It's still there. It has about 350 employees. And this mattress manufacturer, they have the ambition to really transform from a linear to a circular production process and to inspire their full industry to do accordingly. So what inspired them is the problem, of course, that mattresses are one of the largest contributors to landfill worldwide. That is, and here in Europe, we have about 35 million mattresses thrown away every year. So you can see them piling up already. It's a lot of mattresses. And they cannot be recycled in an easy way. So what has Alping done? They've successfully launched the first completely circular mattress in the world. They did that 2 years ago. They've won prizes for that. And core aspects are modular design, and the glue is important in the traditional mattresses. So they need to find different ways to work around that. So they've worked very closely with one of their partners, DSM Niaga. Niaga is a nice term because if you turn it around, it says again. So that's the gimmick there. Part of that technology, they've made that available and provided that as open source to their competitors. So Alping is actually explaining to their competitors how they're doing certain things. So that is quite inspiring, quite far-reaching. I haven't seen many competitors explaining to each other what they do. Crucial has also been the realization that Alping suppliers end up in a very different role, because the supplier becomes a customer of Alping. The material that comes back from the recycled mattresses are being forwarded to those manufacturers again. So it's a very different relationship that they develop. And it was scary to see that at first, to see that evolve. So there was something that was unknown and it needed to be evolved. But it's now all settled. And the last point there was that they also, and that was a major point, it took quite some investment because the circular mattress is more expensive to produce, but in the end, when the recycled materials come back, say after 10 years, it ends up as something that is also having value. So it's not being depreciated to a value of zero, but to say half or whatever you have. And that makes it a good investment case in the long term. But it takes an initial investment. So if you're looking at short-term cash flows, net cash flows, which typically investors look at, it's very bad for net cash flows because a lot of materials are for 10 years out there with their customers. So they had to also have the buy-in of their major shareholders, and they put it down in sort of memorandum of understanding. So when management and when shareholders are changing, that piece of paper is still there, and that mission is still intact. So this to me was a real eye-opener and a very nice story that I briefly wanted to share here as something that we elaborate also on in this publication. And this is what's happening today. So yes, we can.
So it sounds like there's some great examples there in the Netherlands about companies who are kind of embracing sustainability and thinking about the SDGs. I guess there is a danger that moving further afield to jurisdictions and companies who do not have such a forward-thinking relationship with their shareholders, that they may be laggards. So there may be a little bit more push required in certain areas. Do you think is that fair?
I'm not sure whether we need the word push. Some might need the push, but we need all of that. And so we need the inspiration from the leaders which move forward, which tackle the difficult issues, which are allowed to make mistakes, and which they will do in a creative process to advance. We also need the middle field that moves forward as well, that is inspired, that follows. Nothing wrong with following. And yes, for the ultimate laggards, we will absolutely need legislation of practices that we do no longer want, or that things that should be taken into account. But we need all. This is something that we cannot leave anyone out of, because that's also what the SDGs are, because they are so interconnected. It deals with everyone. More and more today, I wonder whether climate change is an environmental or a social topic. And to me, it's both. If climate change really pushes forward in ways we don't want, we will probably see migration from Africa in decades. That's over hundreds of millions of people. And in Europe, we already find it difficult to cope with tens of millions. So that's a different factor. So it becomes also a social issue. It also becomes a question today of redistribution of wealth. Because if the solution is beneficial for all of us, it will not be beneficial for a certain industry, a certain region. Let's take, for instance, the German car manufacturers. If we really move forward, there are massive investments that are needed, and the benefits are for all. But there will also be groups, stakeholder groups, that from their legitimate interest and need might not like the way that solution is going. And so we need to, one way or another, include them. So that's the main message. We need to be inclusive. We need to see the interconnection. And that's important. So we really need to integrate finance and sustainability in every way possibly as we can.
So for coming to my kind of last question for the session, the things that I wanted to cover, thinking about that integration from a trustee's perspective, so from a pension scheme's perspective, what can they do now, Faith, if they're thinking about aligning their investment strategies or trying to be more aligned with the SDGs or what the SDGs represent? What would you say to a trustee? What would a couple of pointers be to them if they were thinking about that?
Thank you, David. And I think it actually might go to Michelle's question, who she's already raised, which is, how do we go from sustainable investing or impact investing to kind of, into more of the SDGs? And I think it does come back to that case study that I raised, which is about strategic asset allocation. You've got to think of this in that sort of more, what is your overall strategy? Obviously, sustainable or impact, specifically where you want to target something, is certainly a component part of that. But actually understanding what the impacts your portfolio is having overall in its totality is something that we just need to be more mindful of. So thinking about it from the outset and asking your investment consultant, your advisor, what are the sort of the implications of sort of investments in this asset class or in this geography or this sector, trying a sort of a deeper understanding of that. Or if I want to access more SDG aligned type of investment, what is my best route for that? What and how can I still do that within a diversified portfolio? Or is there what different ways in which those different SDGs can be accessed through different instruments? So some of them may lend themselves more to private debt or even to fixed income and to debt financing. Some of those might be equity, private equity. Infrastructure we've already touched on. So there are different asset classes in different geographies that will allow people to have different accesses. I wouldn't necessarily recommend or suggest that you think you have to target every 17 of those goals. That is too much to ask. It's being aware of how the fund already impacts on those 17, positively or negatively, but then actually thinking, what are our priorities in this space? So using perhaps an exercise like I've described or some other exercise where you're thinking, so if I was actually to rank these as to what we think are most important to our beneficiaries and our members' interests, which of these would rank highest, and what are we doing in relation to that? And as I say, even though number one might sound like poverty, as I say, may sound a really kind of sort of very big policy goal. Actually, I think being a pension fund itself, as I've indicated, is part of that equation. But then you've got things like clean energy, number 7, you've got climate change, you've got life below water. So there's probably loads of different areas that the fund could identify with. There's things that it particularly feels resonates with its purpose and objectives.
And in terms of, Erik, thinking about, thinking about the work that you've done on your paper, what came out very clearly was engagement with the companies. So for trustees thinking about the SDGs and thinking about what they may do with them, engagement with your underlying investment companies, either through your asset manager or things that you may hold directly, engagement is going to continue to be an important activity.
Yeah, engagement and stakeholder inclusion from a company perspective, absolutely so. The engagement from an investor perspective is not necessarily mentioned in the paper, but I have a lot of experience there. So, but and that is one of the instruments we can use. So building on what Faith is saying, yes, start with where are you today? And what's the snapshot, the photo of today, and how do you already impact the SDGs, positive and negative? And take the balanced approach. 2, where do you want to have your priorities? And build a roadmap, because you cannot do everything at the same time. And 3, look at the different instruments, because they're different horses for different courses. Engagement is a dialogue with an investee company where you try to influence their behavior. And it's very different from a divestment, an exclusion, or a positive screening. So those are very different instruments. ESG integration, I think it's absolutely important. We need to go there. It will help better understand risks and opportunities from companies, and as an outcome, it will have a better financial risk return profile. But we should add, and that's would be my main goal, we should add a third dimension. The world is not flat, so we need that third dimension, and that third dimension is impact. So from today onwards, we need to think in financial returns, in risks, which we still understand as financial risks, and impact. And that third dimension should be in there throughout, in the investment selection process, in the investment allocation process, in the engagement process, in the positives and in the negatives. And as Faith rightfully pointed out, in the reporting. And it's very timely that we start this pool with reporting. And that's already started, because investment advisors do need to show how they have weighted ESG risks in their advice to clients. That's already legislation that's here from the European Union, and it's not going to go away. It will move forward. So reporting on how we do that is absolutely crucial. And the very simple question I would put forward for the entire industry is, can we demonstrate structurally how do we create value broader than just the financial value, which is well documented?
So it's the message, summing up, is that the SDGs are where trustees and pension schemes should be looking in terms of the sustainability of all of their investments, of where we are as a global society, if you like, not just investors. But it's not too late. It's still early days from an SDG perspective, but there is a bit of pressure coming from a climate perspective. So it's the message is trustees should be thinking about this. They should be talking to people about this. But at the same time, they should know they don't necessarily have to try and tackle all 17 SDGs at that one moment in time. It can be something that they build gradually and take forward. But it's things they should be discussing with their investment consultant. They should be discussing with their investment managers, and they should be finding out what their investment managers are saying to their investee companies. And then that information needs to pass back up the chain to the decision makers, so that they're comfortable that things are moving forward in a direction that they want to see. We're coming up for just about an hour. So Michelle's question, Faith's already picked up on that. I don't know if there's any more. Otherwise, I'm going to thank everyone, thank our speakers. Thanks, Erik. And thanks to Faith for taking part. And just to wrap up, thank you all for taking the time out of your schedule to participate today. We hope you found today to be useful. There's one more webinar to come in the Solactive ESG Fall series, and that's next week at 5 p.m. Central European Time, 4 p.m. UK time, and the topic is Man versus Machine, the current state and the future of ESG ratings. So thanks everybody for taking part, and we hope to see you again soon. Thanks very much.
Bye.
Bye. Thank you.